Hey, good morning, everybody, and welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday, so happy Friday to everybody. Hope you all have a wonderful upcoming weekend here. And well, July 8th. So let's go ahead and take a look, see what economic news releases. Let me get that out there this morning, out there and released today. So as I mentioned, today's a big day. So let's go ahead and look, see what we got. Start for the non-farm payrolls. As I mentioned, this was going to be the biggie this week, and the previous month we had 157,000 jobs, which is fantastic. We were expecting approximately about 125,000 jobs, but you know what? We got 18,000. As I had said yesterday, the last time we had a really big ADP number like what we showed yesterday, it came in really low. So this here is a huge disappointment, obviously, especially after Wall Street was kind of rallying after seeing what the ADP brought out, figuring there was going to be a direct correlation. So let's take a look at the unemployment rate. We're at 9.1. We figured we would remain the same, and of course we actually went up a little bit. And then our average hourly earnings, up 0.3% the previous month. We're figuring about 0.2%, so it's zero. People aren't really making more money right now. So people come back. Wholesale inventories, we were up 0.8% previous month, and then basically there's no estimation, but it did go up 1.8. So the wholesale side, they are stocking up a little bit more, so that's kind of good news. But you know, the big news today is really it's all about the jobs and how disappointing it is. So we look at the headlines, and to be honest with you, that is primarily the headlines was the disappointment in the job reports. So as a result, we saw the stock markets down. Uh, One of the things I saw caught in there is retirement of the space shuttle, I guess, in Florida. That's going to be a big blow to Florida's economy. That it actually, they're saying that it represents about 0.5% of their entire economy in Florida, which is, that one particular unit actually takes a pretty good chunk out of it. So you're talking a couple $1 billion right there. So, and then of course you got jobs, and it kind of trickles down to everything else from caterers to travel. I mean, to travel, people, tourists and stuff like that. So that can be pretty big blow there. It's something in Italy. There, the finance minister Tremonti is actually going to be stepping down. A lot of it, I guess, apparently he was staying in an apartment that was kind of provided to him by a parliament member. That actually there's a warrant out for that person to arrest, and then sounds like there's also some uh, maybe some turmoil between him and the president, I guess, their president over there. And basically, as a result, with him stepping down, there's not a lot of faith over there with the political turmoil. So of course, their bond yields are getting a higher rate, so it's costing them more money to be able to borrow money. So of course, we're still getting a lot more bickering in Congress. You got the big things. It's on the table now. Is of course they're trying to negotiate with the raising of the debt ceiling. So unfortunately, it's one thing that hasn't changed is the constant bickering, and instead of trying to get us out of this mess, they're playing politics. So let's all hope together that something will eventually be done, and we all can move on. And regardless what party you may belong to, I think we all kind of want to get some resolution and to get this economy moving, so people have jobs and have money in their pockets. So. Let's take a look now at the interest rates, where the interest rates are moving with the bond market. And basically, we had a huge jump because the disappointment in the stock market. Well, the stock market is really disappointed with the job numbers. We had a big drop yesterday, but that all came right back, and then some today, almost over 50 basis points. So as a result, interest rates are showing an improvement. So they're coming down today based on that. If we could stay above this par 40, we should be in pretty good shape. And then I expect we could be potentially going in, sideways pattern here, as we've seen in the past. Par 80, par 90 has been real tough, so we kind of stayed, every time we tested, we kind of bounce backwards. So we could go sideways for a little bit, assuming that we stay above the par 40 range. And otherwise, interest rates are looking pretty good. We could have another run upwards again. All right, folks, you guys have a wonderful weekend. And again, keep in mind, I am a mortgage planner with First Cal Mortgage. Love to help you with your mortgage needs. If you have any questions or anything I can assist you with, if you're a home buyer, or if you're looking to refinance, there's a couple different options on how to utilize your mortgage. We can set up plans on how you can structure your debt. So, just contact me through my website at CaliforniaMortgageTips.com. Have a great weekend.